Welcome back to Be Rich, guys. As you see, I am live on Instagram as I'm recording this video. Those of you who have seen me on Instagram would know I'm recording right now. It's around 11:30 in the morning. I am feeling better, so I thought, why not and get online and talk to you guys. When I was in Bangalore, I put out question request to you guys, asking you for any questions that may be on your mind, and you guys dropped a lot of questions, and I thought I'll try and answer some of them. So first one which got voted on top is Natarajan Vishwanathan, who said, "Dear mentor, I'm so touched that you think of me as a mentor. I think all of you as mentors too. We learn from each other, so you don't need to think of me as a mentor. Dear friend would be more than enough. Can you suggest one bond name I want to invest in?" And even Krishnan is saying, "Hi Vinod, can you please talk about a bond investment to new investors?" Well, the thing about bond investing in India is you've got to realize most bonds are given by financial institutions. They are the ones who are issuing bonds, and bonds come from values of small multiples less than a lakh, going all the way up to 10 lakhs. And the companies are varied, and you need to know the type of bond it is and the terms of the bond, and if the bond is secured or unsecured. There's so many things in it. I've actually done a YouTube video on this, which I strongly suggest you should go see. That will give you a lot of clarity on how to invest on bond. I don't want to give specific bond names, which is not the right way to go about this. The best way to go about it is to reach out to my team in Ionian, or you can reach out to anyone you like, any bond person, any bond dealers who you know is trusted, and ask them to give you a list of bonds which are available and explain it to you. After you've seen that video, you'll understand, because the terms of the bonds will be listed over there, and then you'll be able to understand what the bond is, and then you should make a decision based on a discussion with that person one-on-one. This is not like buying a stock. And do realize that if you do invest in a bond, you are stuck to those terms and conditions. It's not like buying a stock. A stock appreciates in capital, meaning you put in money. Other than getting some measly dividend per year, most of your returns is in capital appreciation, meaning the money which you invest, it grows. Bond is more like an FT. It is an instrument that gives you return where your capital is secure. The money which you have invested in, that really per se does not grow. What you're getting is interest for that money which you have lent to that company. So it is a different form of, I would say, an instrument of returns more than investment. So if you're looking for bonds, don't take huge exposure into bonds. Don't put all your money in bonds. If you have some lump sum which you want to invest in bonds, you can do that and take that returns that comes from the bonds and then invest it in stocks. That could be a strategy that would work. But don't think that, I want to make 4 crores like what you said, Vinod, and I'm going to put my money in bonds and think that, okay, I'll wait some time out and the bonds will appreciate. The bonds will not appreciate. Even if it's a 10-year bond, 15-year bond, at the end of it, all you'll get back is the money which you put into it. Plus, of course, a yearly or quarterly, whatever interest you've got, depending on the kind of bond which you've invested in. So keep that in mind when it comes to bonds. Again, I know a lot of you would love me to say, go buy this bond or go buy that bond. Sorry, I cannot do that. That will be very irresponsible of me to do something like that, because a lot of you are new to this. I would suggest you talk to a financial advisor of some sort and have a conversation telling them, this is what you want, and they would be able to explain it to you, and that will give you a lot more clarity. Plus, go do see my video on the channel about bonds, the basics of bonds. It's like a primer video which explains to you how bonds are and how they work, and you can do that. Some of you are talking to me on chat asking me if you should be buying ITC Hotel or ITC and all that. Today is a price discovery day. I would strongly suggest that you don't look at ITC today. You'll see a lot of confusing signals coming at ITC price because something as price discovery is going on. That's why you might see a huge discount on ITC share today, because they're saying without ITC hotels, what would be ITC's value? And this is Mr. Market playing at this. So I would be very confusing for a new investor like us to step into this and see what ITC is doing. I would strongly suggest today, don't look at ITC. There's nice market today. There seems to be a lot of things going on discount for you to consider, like I said in our chat group, which I've been posting there. So go take your list out and look at those and consider those things. Next question which I wanted to talk about is, someone has written to me on our group saying, I am 23-year-old male. I'm working in a software industry. I have an educational loan as debt. I don't have any dependents to send money to home. I have taken term insurance, health insurance for both family and me. I have 1 lakh emergency funds. Now monthly income is 54k. After all my expenses, I'm able to invest 20 to 30k. Should I close my education loan of 2 lakh amount or continue paying the EMI of 3k per month? Now, should I invest 35K in the US market long term? Will it help me build wealth faster, right, instead of investing in India? Well, this is a good question. As far as education loan is concerned, I would suggest you don't need to close it since you have all your ducks lined up neatly and you're able to manage the EMI and you can pay it. I would say continue paying that education loan. You don't need to really worry about it. You have set up really well and I congratulate you on this. As far as investing in the American market, it completely depends on what you plan to do with your future. If you plan to settle down once and for all in the US and not come back to Indian shores, then of course it makes a lot of sense. If you in some future point you are thinking about coming back to India, then I would say you need to have a slightly different strategy on your investment. Yes, the American market can look, with the dollar conversion and everything put together, can look very ripe for picking sitting in India, but it's more than that you should take into consideration. Returns is one thing which you all should have prime focus on. But another thing you should have focus on is what is your end game? Where do you want to be? What do you want to do? And how do you want to access this wealth you have created at that point of time? All those considerations should be taken and it should just not be based on how much return you're going to get or how much faster you're going to get somewhere. So keep these things in mind before you decide to jump into going full hog in the American market. And even if you're decided to go into the American market, please be prudent and be careful in your stock selection. And right now, there are a lot of stocks in the American market which are highly overvalued. So be careful in your stocks which you also decide to pick. Like Anand says, there are diamond needles everywhere in any stock market because Mr. Market is at play there. And what else you guys are asking me about? Well, talking about ITC hotels. A lot of you are asking me, should you buy ITC hotels when it lists and keep it? Well, ITC Hotels is a new company. For all purposes, yes, they've been doing business for some time, but as an independent company, they're going to be a new company, right? They're going to have their own management team, their own set of functions which are going to be happening, and their data, their accounts and financials are going to be separate for the first time. So it's going to take some time. I would strongly suggest if you are very keen on ITC hotels or hospitality industry to invest in, be careful, be slow, be methodical in it. Like I say in tiffin coffee ranges, if ITC hotels lists at 20, 30, 40, 50 rupees, I would suggest to look at a tiffin coffee ranges. I will not be someone, this is my personal opinion of course, I will not suggest that you put in a lump sum into ITC hotels because it's going to take a long time for this company to grow and through gestation to become huge like Indian hotels is going to take a sweet amount of time. And do you have patience for it? Do you have the runway for it? Are you willing to wait for it? Is something only you can answer. It'll be very difficult for me to answer that for you. What am I personally doing? Right now, I'm not looking at ITC hotels other than what comes to me from the shareholdings of ITC right now. After it lists, after some cool off period, especially after BAT decides to dump its holdings in ITC, I will sit and watch because there's lots of conflicting news and prices are being spoken about at extraordinary amounts. So I would say please wait and watch would be my suggestion. The next question comes from Sujit. He's asked, I've accumulated 1,100 in quantities of Manapurams, 2,200 in Gold Bees, 2,500 in IDFC, 300 in Tata Motors, 300 in ITC. While I hold and accumulate all this for a long time, can we invest lump sum for a swing trade to build capital? If stock fails, I can hold them long term, average it. My cash flow is good. I'm a long term investor. Well, the problem is, Sujit, you're kind of contradicting yourself. When you're saying you're a long-term investor, then swing trade and lump sum and capital appreciation, I don't know why you need to worry about it. If you really know what you're doing and you have the stomach, because you are a long-term investor from looking at your portfolio and you seem to be doing very well and you've been doing it very diligently for a very long time. And if you would like to do these swing trades and you have the nerves for it, then by all means, I don't know, you'll probably be doing it already. The mere fact that you're asking me out this question in a public forum, you're throwing it out there, is that you yourselves have a little bit of doubt in your nerves and you're not sure if you can hold to see these swing trades happen and see capital not appreciating and if the stock fails. So that itself tells me you really are not sure about it and I would strongly advise you against it. Do not try to do any swing trades in the short term or in the long term. Be steady and invest slowly and keep buying at value at levels where you are happy not to ask anybody what you're doing, because all the other companies you have bought and accumulated so far, you have done it on your own accord without asking anybody or even me or my brother. So that shows volumes that you're good at it. So I would suggest that is your risk level and you stay at that level and not try to venture out beyond that. That would be my advice. This person, Kishore, is asking me, "Hi Vinod, my mom has approached by SBI bank agent with an investment plan where you pay 1 lakh annually for 7 years and receive 12 lakhs in the 8th year. My friends are also being approached by banks with similar plans. I need your opinion on this. How are they able to offer such plans? It seems lucrative but suspicious. Could you please discuss this on a video topic?" Well, Kishore, you're absolutely right. There's only one place everybody in India can make money, and that place is the stock market. Even all your insurance companies and your banks use the stock market to leverage and take positions and make money. So if they're offering you this kind of a plan, is they take your money and they invest your money in the market, they make a sweet profit on that, and then they return a bit back to you, and that's it. If you really look at the numbers and you calculate it out, I don't have my calculator with me, but you can open any SIP calculator. You divide this amount 1 lakh, which you're going to put annually, and divide it into monthly, put it for 7 years and put even, a very conservative return of 13-14% market return. And you'll see you'll definitely make more than 12 lakhs in 8 years. So this is where the whole rub is. All these guys take these money and they invest it in the market on your behalf without saying they're doing that. But of course, they are assured to giving you that return. And I think you will definitely get that return if you invest it yourself. But the thing is, you need the confidence. And your mother would not find the confidence because stock market has been sold by movies like Lucky Bhaskar as a place where lots of crazy, nefarious things happen. And you can lose money, you can get wiped out. And all these are just valid. If you do gamble in the market, you can lose your shirt. So I can understand why your mother feels nervous about it, and she'll probably hesitate to give you this cash and say, you invested in the market and you give me the return. That also won't work. So it's actually meant for people who are very risk averse, who don't want risk, but they want guaranteed return. So that's who these people work for. If your mother does have this, I would suggest that she can even look at a bond, which will probably offer her better returns. Then again, you guys will ask me, which bond should I buy? And again, I can't answer you which bond to buy. You will have to do a bit of homework over there. Like I said, there are many people who can offer you bond advice. Please go find and always double check with another person. Don't, especially even with me, if I give you some advice, always go check with someone and saying, hey, Vinod told me this. What do you think? There's nothing wrong in doing that. I will be very proud of you if you do that, rather than taking anything I say verbatim. And Anand Raj is asking me, some new patas list, please. That comes to the topic of the day, right? The topic of the day, which I wanted to talk about, is this idea of having patas lists. Why do I have a patas list to start with? The reason why I have a patas list to start with is we human beings have a problem choosing. And when we are given too many choices, we make it very hard. It becomes very hard for us to decide to do anything. So at that point of time, what we do is we retreat and we don't do anything. This happens especially when you see in buffet tables. When you go into a restaurant and they have a buffet, we see all the food laid out there. This happens to all my boys, especially when I last time took them out for a team dinner. We took them to a buffet and they found it incredibly hard. One of my boys, actually, what happened is he overate and then he felt very sick in the hotel. So this is a human condition. And that is why I want to avoid this whole giving you a list. I want you to keep it small, keep it concise. Don't keep looking for new things. You don't need new things. What you need is consistency. And if you build this consistency, you don't need a new patas list. This patas list is enough. That's why I did a video specifically about the Tata companies. If you just kept buying Tata companies for 5 years, what would have happened? And I said that the other video where we spoke about how we made 4 crores, investing the same amount, in 15 years we made 4 crores. That was the same companies. Imagine how boring it would have been for 15 years to buy the same companies, 10 companies over and over again, every month for 15 years. Is that boring? And most important thing which I want you to keep in mind is, it doesn't require, all of us believe that investing is some kind of wealth creation, is some kind of lifestyle, that you have to change. Because if you have an investor mindset, you have to give up on everything. It's a complete change of your reality. It is not. Investment and wealth creation is nothing but a few minutes of your time during the day. That's it. You can continue living the life you want, leading the things you do. I'm not asking you to change your life completely. I'm not asking you to transform yourself into some Warren Buffett. You can. If it's something you want to do, you can become a Warren Buffett. You can spend your life learning about everything about economy and macroeconomics and do all that. But If you just want to create wealth for yourself, you want to create yourself a retirement fund, something to fall back on, all you require to spend a few minutes a day to do it. And that's it. And that's the whole point of this 247 challenge which we're doing. We're on day 5 now. I hope you have done something in the market today, tiffin, coffee range. I even spoke to my team in the morning and asked them if they've done what they were supposed to do. It just takes a few moments of clarity, being present from that list which you have. It's that boring, choose and move on. And that is the investment principle by Peter Lynch, by Warren Buffett, by anybody, by Charlie Munger. Those stocks which are reliable, which we know about, which we have, strength in, we buy those and we move on. Constantly asking for a new patas list or something, that shows that you're trying to make this into something exciting, and it's not something exciting. Investment should be boring. Wealth creation should be boring. If you are looking for some kind of excitement, some thrill in this, please find yourself another hobby, and investing should not be that hobby where you're seeking for a thrill. Because what will happen is, if I start giving you new lists and new companies, talking about new things, very soon it's a slippery slope. You'll start becoming a trader. You'll start looking at future options. You'll start thinking about crypto. You'll start thinking about all kinds of fancy things. And before you know it, lo and behold, you would have wiped out everything which you've built so hard to build. So that's why I keep saying, stop asking me for new patas list. You don't need. If you have 10 companies, good companies, reliable companies, which are in great price points, you are blessed. Invest and forget and move on. And other than spending those few minutes in the market, like I said in the other video, which was supposed to be the motivational video for the year, do other things, right? When you want to read market news once the market is closed. If you open market news right now, Business Standard or Economic Times, you'll read about some company, about some deal, something, and you'll feel like buying it right now. And that can become another issue. You'll end up buying some company on a whim because you read some piece of hot news. So my advice would be not to do that and to stay invested in this. Of course, there's a lot more questions. I've not even gotten the tip of it. I will answer the rest of the questions as a chat. And I'm sorry I can't answer all 200 questions like this. It'll take me forever. I'll probably run out of steam too. I'm still recovering. And I hope you found this video informative and entertaining. Those of you who managed to join me on Instagram, I'll try and do more of this interactive sessions where I'm recording the YouTube video and I'm on Instagram answering some questions and interacting with you guys. It was a lot of fun for me. I am feeling better, so I'll be back with some more stock news and stock related news tomorrow. As I was recording this video, Anand was behind me and he was telling me the market is already down by 400 points. I do hope, because by the time you're watching the video, it'll be over, it'll be evening, you'll be eating your dinner. I hope you did manage to do some tiffin coffee. Please remember this. I don't know how to stress this more and more. No matter what happens dramatically in the market, we are nowhere near where you should be dropping your kitchen sink. Just because you see some price movement in the market or you see ITC going down by 7-8% doesn't mean there's a correction happening in ITC. It is not. Like I said, it's a price discovery. So if there's any reason for us to be taking our bank to the cleaners, me and Anand will be the first ones to be hollering out to you guys. So till then, keep it tiffin coffee, keep it simple and stay in your lane. And do not do any lump sum, swing trade and all that in the market, please, for heaven's sake, unless you know what you're doing. I certainly do not know what I'm doing, so I will never do such things. That's me. Thanks for watching the video as always. I'll see you again tomorrow on another one. This is me, Vinod, signing off. Bye.
Hey guys, that my uncles Vinod Srinivasan, Anand Srinivasan and I have rolled out our Substack, which is basically a blog/newsletter where we're going to post our original research onto it, and we've analyzed macroeconomic trends. And a lot of you know my uncle Anand Srinivasan and I regularly write for The Hindu, and these articles are also going to be made available for you in the Substack. The link is moatinvesting.substack.com. You'll find it in the description and in the video right now. We hope you go check it out. We've put a lot of time and effort into it. And please give us comments and feedback on what you read. Thank you.